everyone and welcome back to our first midweek technical look here at example.com of this year. So we're going to have a start with the US500 that we had a new all-time high on yesterday's session, but today is moving lower. Also, oil prices, that developments in Venezuela are still holding the headlines, and also the Bitcoin that is moving beneath the 90,000 round number. So starting from US500, we can see that after it reached a new all-time high at 69.65, and it failed to have a touch of the 7,000 round number, which is the 161.8% Fibonacci extension level of the downtrend that we have in the previous year, from the peak in February until the lows in April at 7,000. We can see that the market is moving lower, and the first supports are coming from the 20 and 50-day SMAs around the 68.70 and the 50-day SMA at 68.18. Now, if there is a drop below these lines here, then the next crucial level to have in mind is the previous bottom at 67.25, which overlaps with this medium-term uptrend line, which has been drawn since May. Now, if there is a closing day below this level here, then it would endorse a bearish correction, and it may switch the short-term outlook to a more neutral one, hitting this bottom here at 65.08 before meeting the 200-day SMA at 63.40. Now, as long as the market remains well above the 200-day SMA and also above the short-term SMAs, the outlook is still strongly bullish. So if there is another move to the upside, then the next target will be the 7,000 round number, and even higher, the next psychological marks such as 7,100 and 7,200. Now, having a look at the technical oscillators, the RSI is ticking down above the 50 region, and the MACD is moving sideways slightly above the zero area. So both of them are confirming that we're having a weakening positive momentum right now. Now, switching to oil prices, that it had some reaction over the last couple of days, especially after the headlines from Venezuela. We can see that the price is currently holding near the 56 level. We have the third consecutive red day after the pullback from the 50-day SMA and the 59 round number, as well as this medium-term descending trend line, which has been drawn since the end of July. So the next support, it may come from this bottom here around the 55.10, which is a 5-year low, and even lower the market, it may reach the 50.50 stronger barrier, which is taken from the lows back in I think 2021, around these inside swing lows here from 2019. So if the market continues this decline, it will switch the outlook to a more bearish one. On the other hand, if there is a move above this uptrend line and above the 59 level, then the market, it may reach the 61.40 resistance and then the 200-day SMA at 62.80. A break of this level here, then it would endorse the scenario for a bullish correction, maybe until the 63.15 and even higher, the 66.60 barricade. Having a look at the technical oscillators, the RSI is moving lower below the neutral threshold of 50. Also, the MACD is extending its negative momentum beneath its trigger line, and it remains below the zero area. So both of them are reflecting this downside movement in the market. And now, having a look at Bitcoin, that we had an improvement at the beginning of the year, but we can see that right now is completing the third consecutive red day and is moving back near the 90,000 region. So the market, it remains within this trading range which has been developing since November of the previous year, with upper boundary around the 94,000 level and lower boundary the 84,400. And if there is a move below these SMAs here, then the market, it may have another test of the 86,600 level, and also this long-term uptrend line that we can see from the monthly chart, which is developing since September of 2023. So if there is a closing day below this region here, then it will confirm that we may see some more declines in the market. However, if there is a move above the 94,000, then the market, it may create some more positive actions until the 99,000 region, and even higher, maybe until the 200 DSMA and the 106,100 level. Now, from the technical oscillators, we can see that we have some contradicting signs here. The RSI is pointing down slightly above the 50 region. The MACD is standing above its trigger and zero line. So I think that we have to wait to see if the market will remain above this area here, or it will break below it to continue the downside structure that is started from October of 2025. So that's all from me. Thank you for watching and have a great day.